Large cap stocks keep making new records. At the same time, there is a bearish divergence on an equal weight S&P 500. I'll show what I mean by bearish divergence. However, junk debt high yield bonds indeed have hit new all-time highs, so they are confirming the rally for stocks. We will also look at gold, which is most likely headed for a fresh all-time highs. All this and more in today's edition of MasterChartsTrading.com market recap for Saturday, July 6, 2024. As always, please hit the like button, subscribe to the channel, share this video, make any comments that you like. Hopefully they are relevant to our topics. If you're a subscriber, stay tuned. You can see we have a very busy agenda for the members only video. We'll cover market breadth, Bitcoin, Ethereum, crude oil and natural gas in the members only video, as well as various ETFs, large cap stocks, speculative stocks, and you can't really see it, but they are indeed down there, gold related stocks which are doing quite well. As always, I'm going to be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this line. There's green, blue, red, and yellow lines. You can find out more about them by going into the description and following the link. S&P 500 and most other indices made a fresh record. This is a new all-time high. If you watched my previous video from last Friday, I mentioned this particular candlestick, which occurred on the 28th of June, last Friday. I thought that this was a top-end candle. Clearly, a daily candle is not as important as, let's say, weekly or monthly. On a weekly candle, there was really not much. This was a previous week's candlestick. It was not really that bad. And this week everything was negated again, and we made a new all-time high. So how do we trade this type of market? Well, at this point we don't really buy, we just hold. We buy on a pullback. So for example, in this case, for S&P 500, the latest opportunity, or the last opportunity for that matter, was in October of last year. This is a weekly chart, meaning each candlestick is a week's worth of activity, and this is a daily chart, meaning that each candlestick is a day's worth of activity. And notice this is the last opportunity back in late October, early November of last year. I also bought myself back in October of last year, and I'm still holding half of my position, because I thought that back in January of this year was indeed the top. I clearly was so wrong. But, you know, I still have half my position. I'm still holding QQQ, Nasdaq QQQ. I actually bought even earlier, back in January 2023. My position is up now 77%. I did sell about half, so I'm holding about half my position. So as far as trading this particular security, S&P 500, currently there is really no pullback opportunity. The best pullback opportunities are when we see a pullback, a relatively deep one, towards this blue support resistance line, and then we see a bottoming pattern, as we had here in November, October of last year, and we just buy it there. This latest pullback that occurred back in April of this year took us back towards this green line, and this was not really a deep enough pullback for my taste. So we didn't really do much. We just kind of held our positions, and we did really nothing. Now, I wanted to highlight one of the ETFs that I don't normally look at, but it's kind of interesting. This is ticker symbol RSP, also known as S&P 500 equal weight ETF. So equal weight just means that Nvidia, Tesla, and Google are equal in weight to various other members of the S&P 500, such as Ford, for example. So in other words, no preference is given to the large cap stocks. For S&P 500 ETF SPY, it is capitalized, or rather market capitalization based ETF, exchange traded fund. So in this case, the S&P 500 ETF SPY, we have clearly we have huge performance, and this is if we look at the equal weight ETF RSP, we can see that RSP was really flat. We made a new high back in March of this year, late March of 2024, and no new highs since then. So I'm gonna show it to you on a different graph. This is from StockCharts.com. It's just more obvious. So notice here that since about mid-May of this year, 2024, the equal weight ETF RSP didn't really make any new records. It sort of traded sideways to down. Notice that S&P 500. I'm sorry. This should say this like that. This is S&P 500. So the equal weight ETF made no new records, while the capital or the market capitalization based ETF SPY did make multiple new records. So this is what's called a bearish divergence. This shows that an average stock within the S&P 500, such as mid cap or smaller cap, that are within the S&P 500 are underperforming, and the market is being driven by large cap stocks. This is also obvious in the various market breadth measures, which we will look at. If you are a subscriber, then stay tuned for those. We're going to be looking at bullish percent index. We're going to be looking at percent of stocks above the 200-day moving average. We'll also look at put to call ratio. But for just looking at this chart, notice that it's pretty obvious divergence. So this is what's called a bearish divergence, meaning that the large caps are driving this market higher, and eventually two things could happen. We will see a general rollover of the large caps and the whole index will be taken down, or we will see outperformance by small and mid caps. It's also possible, and in that case we might see continued new records and even and also new records for the equal weight ETF. So, but for now, you notice that RSP, the equal weight ETF, is underperforming, has not made any new records. Bearish divergence, how important it is, difficult to say. Timing a short entry during a bull market is notoriously difficult because, as I just showed you, let's just pretend for a second that I was very convinced last week on Friday that this was indeed the top, and let's say I shorted it here. Notice I would have been already stopped out at a loss. So timing this kind of short entry during the bull market is very, very difficult. If you watched any of the movies, for example, I forgot the name of it. It's The Big Short. The Big Short. Yeah. So you can see, if you remember that movie, they did short the market, but they were so early, and then only after nerve-wracking, several, I want to say months to like a year or even more, they finally made money. But during that time, they were negative multiple hundreds of percent. So again, timing a short entry during the bull market is a very difficult task, and I would not recommend it for any beginner trader, but even for advanced traders, I'm not sure it's a good idea. So the takeaway here is that right this instant we have multiple divergences. We have a divergence between the average stock, so basically mid to small caps within the S&P 500 are underperforming, and the market is being driven by larger cap stocks. And additionally, like I said, if you're a subscriber, we will look at multiple other divergences between that are showing underperformance by the mid and small caps, and it's pretty obvious if you look at some of the market breadth measures such as bullish percent index and percent stocks above the 200-day moving average. Again, will we see a pullback is impossible to tell. Eventually we will see a pullback, but again, to time it is virtually impossible. Having said that, we are looking currently at high yield bonds, junk debt, ticker symbol JNK, and notice that it is making a new record. This is an all-time high for high yield bonds. This is obviously a good sign because high yield bonds correlate highly. This is JNK on weekly time frame. Down below here we have what's called correlation coefficient, correlation to the S&P 500. Notice that the correlation is quite positive most of the time. S&P 500 and high yield bonds move together in lockstep. Currently we are indeed doing this the same dance. We're moving together in lockstep. S&P 500 is making records. High yield bonds are also making records. So no divergence there. Good news in my opinion. We will continue to monitor and trade on the upside. We have traded junk debt, so alert sent for high yield bonds. Notice October 23rd of last year. Pretty obvious move higher. How do I know? All we need to do is just look at the indicator lines. Once we hit the blue line, we buy around the blue line for a move towards new records. All right, let's change our perspective. Now we're looking at the dollar currency index, DXY, and it is currently in an uptrend in the sense of my bias for the dollar is to the upside. I want to be buying the dollar for now. Notice multiple up arrows here, and they basically worked out. If you held, for example, this move from even as early as May and then as late as June, you would have made some money for this trade. Notice that we have bounced off of this green support resistance line right there where I'm hovering on June 26th, 27th, 28th, and again we touched it on July 2nd. This is proven to be resistance. So notice that we have bounced back. Additionally, notice that the indicator lines are kind of curving up towards the price action. So now we're it will be easier for this index to continue lower, and because notice that the red line is also kind of curving upwards. So if the price closes below the red line, it means that now we are in a downtrend. We haven't gotten there yet, so technically speaking we're still in an uptrend for the dollar. However, this resistance that I just showed at the green line is concerning if you're a dollar bull. I am currently still a dollar bull. I wanted to show you the correlation, or rather I wanted to show you the relationship between gold and dollar. And gold and dollar normally move in opposite directions normally. So gold at the top here, dollar in the middle, and correlation down below here. Correlation usually, or vast majority of the time, is somewhat negative. Occasionally we get the positive correlation. So notice that right now we are in the middle of that same current positive correlation time period, meaning that gold and dollar are doing the same thing. In this case, dollar seems to be moving higher in an uptrend, and so is gold. So we're currently looking at gold, and gold did, just a lot of just back and forth. This big candlestick here on June 7th of this year, I thought that this was it. I thought we were gonna collapse. We made another attempt and we pushed lower and retested this support. I just kind of drew it in and then bounced off of it and rallied. So right this instant, I have a very strong suspicion that gold will make another attempt to get to the records. So all-time highs for gold were set on 20th of May, and I think we will see new records for gold, and this is despite strength in dollar. Looks like dollar and gold currently are doing their own thing. We are trading gold. I am personally long gold, or the gold miner, so I'm gonna show you my position. Royal Gold, I entered it relatively recently, right there where I'm hovering on the 18th of June. I bought Royal Gold. Why did I decide to do that? So once again, when the stock breaks above this blue support resistance line, we can just buy it basically. However, if it's already above this blue support resistance line, we need to see a pullback. So this is what I did. I was waiting for a pullback, and I got the pullback that I wanted. I wanted for the stock to come to me. I don't want to be chasing the stock because, you can see that the risk is lower, right? Yeah, you want to be buying when the risk is relatively low. So I bought gold, Royal Gold myself. I'm holding a position right now. I don't even think I sold anything yet. I haven't taken any profits. I have moved my stop to entry, meaning that I cannot, well, there's always a possibility of losing money, but very low probability of me losing money on this transaction. So currently I'm holding Royal Gold. Many of my subscribers are holding gold. There is a separate, or we're going to be covering gold related stocks. Again, they're kind of hard to see, but I can Equinox Gold, Fortuna Silver, Goldfields, Hecla Mining, McEwen Mining, Royal Gold, and Silvercorp are going to be covered in the members only section. So if you are not yet a subscriber, consider signing up by going to the description, the link in the description, and go to MasterChartsTrading.com. Click on sign up for one of the products. So again, I have trading indicators. So trading indicators are these lines on the chart. You can trade on daily, weekly, monthly, hourly chart, but if you're going to be trading on hourly or anything below the daily chart, you need to follow certain procedures, which I can easily explain, and I have a manual to do that, how to do that. Newsletters, so I send out daily alerts about various securities we trade. So notice we have quite a bit of various securities that we trade currently, and additionally there is a weekly members only video that was going to be coming out very shortly. And of course the best deal is to get both trading indicators and newsletters at $49.95 per month equivalent. So that's if you get the yearly subscription. If you want to get a monthly subscription, it's $59.95 per month for both of them. I think the yearly obviously is a better deal. You just pay once for a whole year ahead. You get almost 20% off for the price. Again, if you have any questions, please let me know. Otherwise, don't forget to hit the like button. I really appreciate that you listened all the way till the end. Make a comment. If you have any questions, ask the questions in the comment section below. Subscribe to the channel. Share this video with others. Again, thank you for watching and have another great trading week. Bye-bye.